Sometimes in a high interest rate market, we will see buyers look for homes with FHA mortgages, primarily because they can, with a low interest rate. So why do they do that? Primarily because they look at it could be a way for them to obtain a lower than market interest rate on that property. So today I'd like to cover the hidden risks that are involved for the assumptions, FHA assumptions for the seller. So this is something that I think you would want to let them know, because most people may think it's a win-win situation for both people, but not always. So the first thing we want to make sure that they are aware of is that the lender may not release the seller from any liability. So what does that mean? So if the seller could still be on the hook if the home buyer defaults on the loan, depending on the lender's decision here. Second is that, of course, on that same note, it could create damage to the credit on there. So if it's not released, then you got late payments or you got foreclosure by the buyer, that could impact your seller's credit as well. And thirdly, we got the hidden assumption fees. So lenders aren't exactly transparent about these, but however, I have seen these fees very widely. So again, there's no rhyme or reason, or there's really no logistics that we are aware of how they come up with these fees, but they do exist out there for you. And last, an FHA property standards apply. So if the home doesn't meet the FHA guidelines, the seller may be forced to make repairs before the deal can go through. So if you are a home seller, have a FHA mortgage, are thinking of allowing an assumption by a buyer, please make sure that you dot your I's and cross your T's, and make sure you check with the lender first before taking on these risks, because that's obviously a great risk that you're taking on your part, and may or may not be a good thing for you. So again, go ahead and evaluate and see what is your risk, to what you want to take for a risk in this. If you got questions, please reach